Well, with hopes that the U.S.-China trade truce would finally put a stop to a full-scale tariff war, most Asian stocks rose, tracking a rally in Wall Street. Now, this is following a rapid $6 trillion surge in the S&P 500 from the brink of a bear market. Trading action on Monday suggested more upside. Now, gains in Asia were driven by Japanese stocks, with the topics rising for a 13th day. Shares in Australia and Taiwan also climbed. Chinese shares rallied to erase April's tariff-driven loss after the truce with U.S. boosted trade optimism. However, the Hang Seng Index fell and investors booked profits. The market euphoria returned after U.S. and China agreed to lower tariffs on each other. The U.K. and China deals led to investor optimism for a wider de-escalation in the ongoing U.S.-led trade war on multiple fronts. Investors are jumping back into Asian stocks as they unwind the defensive measures put in place at the height of April's tariff chaos. Now, separately, Indian and Pakistani stocks surged after both countries confirmed that there will be a further military hostilities. While the situation remains fluid, market reaction shows optimism for the agreement to hold. To give some context, Indian stocks rallied about 3% on Monday, with analysts calling for benchmarkers to climb further and close Tuesday with solid gains. Pakistani stock index surged nearly 10% on Monday and was on track for another good session by Tuesday. In commodities, oil held steady early on Tuesday after 3 days of advance. Brent traded above $64, a barrier after closing 1.6% higher in the previous session. The focus is now, and it turns to West Asia and low bill price loving Trump's visit to the region. The gold steadied after a sharp sell-off as a major de-escalation in U.S.-China trade tensions hurt demand for havens. Bullion traded nearly $3,237 an ounce after losing 2.7% on Monday. Investors are now betting on a strong recovery in stocks and rising riskier assets. The U.S. dollar rose the most since a post-election rally in November as Treasury yields climbed. Both acted as headwinds for gold. But in a surprising move, top crypto tokens took a hit. Bitcoin fell over 1% to trade at around $102,000 after having halted from below $80,000 to about $105,000 on Monday. The second most valuable token based on market cap, Ether, crashed 3.4% after having rallied over 30% last week. The seesaw in cryptos came at a time when investors are betting that digital assets had turned the corner into more stable, mature assets. And well, for more on this, our correspondent Susan Tarani sent us this report.
The U.S. and China hit pause on their trade war, agreeing to a 90-day truce that slashes tariffs on both sides. The United States cut rates from 145% to 30%. China cut theirs to 10%, and the markets rallied fast. The S&P 500 jumped 3%, and tech stocks like Amazon and Meta surged, riding on this optimism. President Trump said, quote, "If we don't get a deal, tariffs will go back up, but not to 145%. He said, "We want fair trade, and we're getting close." Meanwhile, investors are breathing easier for now at least, but everyone's watching this truce very closely because after all, it's not a resolution yet. One wrong move and volatility could return in a flash. Susan Tehrani reporting from New York for WION World is One.
Well, to discuss more, we have with us Professor Simon Lee, adjunct faculty of the Chinese University of Hong Kong, who is now joining us live from Hong Kong. Welcome to the broadcast.
Yeah, hello. Good morning.
Hello. Well, let me begin by asking you, what does the U.S.-China trade deal mean for the global economy and markets? If you could just briefly get onto that.
It is such a temporary recovery because the deal has not been concluded. Also because in early April it fell too much, so that's you see the many global indexes shorts, and then the gold price falls and the renminbi strengthened. But there are lots of uncertainty ahead unless we know that certain deals can be concluded in the coming few months. Otherwise, many investors, many stakeholders, they use this short-term window to speed up the transaction for the Thanksgiving Day and for the Christmas. But then after that, we don't know the direction ahead.
Right. Now, we will see Trump softening his tariff stance. We just saw him do that. Given the recent trade deals with UK and China, what are your opinion on that?
I think he is more working on the detail rather than just implementing a flat percentage tariff all over the world. Now he's working on the detail. So finally, I think that for those countries who are friendly to the United States, the tariffs will be on the lower side. But then for those countries who are not so-called friendly to the United States, still on the high side. Even when we see that it's ceasefire for 90 days, but the current tariff is still higher than the before the Trump administration. So I'm not so optimistic on the final deal. Eventually, those investor, producer, customer, they need to bear a higher tariff than before.
All right. Well, you just said that, but just for me to get further with that, is this a possible de-escalation, if you may say so, in Trump's tariff rhetoric?
I do not agree with that because it's just I believe it's just a kind of tactics made by the Trump administration, try to initiate very high tariff at the very beginning and then ask for a better deal. So eventually the tariff was still higher than before. And also Trump need to concerns about the feeling and sentiment in the US stock market, and also the higher the tariff, the higher chance of having recession. Now we see that the inflation is expected to be higher than before, and then interest rate remain high, then there's higher chance of having recession. I think Trump administration want to avoid that.
Well, let me go a step further and talk about India. Well, what, according to you, does the U.S.-China deal mean for India, which was looking at China plus one strategies by firms as a way to attract more manufacturing investments in the country?
Yes, certainly. Because many countries that believe that they need to reduce the uncertainty with China. So many factories move out of China, and the highest population in the world for India and the young population. So eventually, I think in the medium term and long term, India will benefit. But it takes time for India to build all the infrastructure, also the learning curve in the manufacturing process. Those highly skilled products needs education, and it takes time for the workers to work on the sophisticated product and equipment.
Right. Well, of course, the meeting did say that it's not a perfect deal as such, but they did look at some substantive steps following this whole meeting between the officials of China and U.S. But of course, we're looking for how it evolves. But thank you so much for joining on the show and giving your perspective.
Thank you.